So I've got 3 possible areas of where the market can go towards where I might be able to find take profit levels and have a 1 to 3 risk to reward ratio trade.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Hello guys and girls, and welcome back. It's your boy Big John. That's at the bottom of the screen if you like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'm going to be speaking about is simple price action. So it just occurred to me and I was thinking, why not actually give out some of the trades that I'm actually teaching with my students in the VIP group? So I've said, you know what I'm going to do? Out of the pairs that we're looking at, I'm going to pick at least one of them and I'm going to break it down on YouTube and start to show you guys and girls trade setups I'm actually looking at and why I'm actually looking at these trade setups. So it's going to be very simple and basic Forex, and all you need to do is have your psychology in check and your risk management in check. Once you've got those two in check, you're going to be able to take trade setups as simple as I'm explaining it in these videos going forward. So we're going to be looking at Gbpchf today and a possible buy for a long position. I hope you're going to like this one, guys and girls. Let's get straight into the video. Okay, so as you can see, I am on my chart at the moment. I am on TradingView and I'm on Gbpchf. And what we're going to do is we're going to start from the monthly time frame. So why we're doing this is because we're going to play on the aspect of top-down analysis. I'm sure you've heard this before in different places and things like that. And it's literally what they like to call trading 101. It's the most basic way you should be looking at your charts. You should be looking from a higher time frame going down to a lower time frame to gain your entry. I'm going to show you how it's very simple for you to be able to do something like this. So when we start on the monthly time frame, the first thing we're going to do is understand that each candle here represents a monthly time. So only one candle is going to form after the month is actually closed. As you can see at the bottom of my screen, it says here. And what we're going to be doing is just drawing simple support and resistance. Now, for me to draw my support and resistance, what I like to do to make it easier, and because we're doing top-down analysis, I'm going to be drawing it from the body of the candle. So if it's a bullish candle, let me just zoom in, you will see that I have my support level here where the volume and the body of the candle actually is. I'm not using the wick, even though price went all the way down there, I'm using the body of the candle. And for a resistance, you can see the same thing came here. I'm using the body of the resistance candle, which is the sell candle, to draw my resistance level. So what we can see here is that this is a monthly resistance zone. Why is it a monthly resistance zone? We can see that price has managed to come up to this level and then sold down. So always think as your resistance as the roof. Now, when we think of a support level, think of it as your floor. We can see that price had sold down to this level, found a support here and bought off of this level to the monthly resistance. Now we've done our monthly analysis for support and resistance. What we're going to do is we're going to go down to a weekly time frame. Now, when we're on the weekly time frame, we start to understand that these candles are formed based on every week closing. So when the week actually closes, that is when you will see one of these candles forming on your chart. We can see that there's a resistance level here. So I've got my weekly resistance, as we can see price sold down here, and we can see this is a weekly support, as we can see price has bought off of this level. So now what we're going to do is we're going to go down to a daily time frame. Okay, so we're on the daily time frame at the moment, and each candle now represents 1 day worth of movement. So when the candle closes, that's when the day actually finishes. And we can see now that on the weekly time frame, if you just go back a minute or two, you can see that this was wicks on the weekly time frame. There was no body of a candle at this area. This is one of the reasons why top-down analysis is very good, and it's key, because then you can start to see better levels of support and resistance in the market. So we can see we have a daily level of resistance here now. So this helps me. So when I'm looking for a trade set, I'm not just expecting it automatically to go all the way up to this level. I'm seeing where the market could possibly stop before it gets to that level. And on a daily time frame, it shows me here. Now, the next thing for us to do to look for a trade setup, of course, this is a very huge space. And unless you've got a lot of capital, then you wouldn't really be trading just straight off of the daily time frame with low risk and huge capital. What you're going to do is need to go down another time frame. Now, this is a good time frame, I would say, for when you have a certain amount of capital, you know, which most retail traders do. We don't have hundreds of thousands and millions. We usually have, you know, 10, 20K, or if you've got a proper account, you might have, you know, 100,000, 200,000. This is still a very good time frame for you to look for an entry on. So what I'm going to be doing is, as you can see here, price has done something very simple, this pattern that has formed. We can see that a double bottom has formed here in the market. Now, a double bottom is just a W-shaped formation that has formed in the market. So I'm going to draw out the W so people can see what we're looking at. So we can see from the top down to here, pretty much up to here, down back down to here, and here is where a W pattern can look like. M's and W's, in my ultimate beginner's guide, I explain all of this. You will see the link in the video right here. And what your job is to actually do is to trade the second leg of the W when it does form. So what we're going to be looking for here again is another level of support and resistance, because we want the market to break out and then we want the market to retest an area to show us that the trend could be going into a bullish direction. So what we can see is when we put another line right over here, and we're just going to change this to a 4-hour level of support, we can see when we pay attention to this area, the market found a weekly support here and managed to stay on this level. Then it broke out, then it came back to this level here, but this level is much more established. We can see on the 4-hour time frame, as we can see, the market could not break this level and bought off of this level, and then it went to this daily resistance level we have seen. So of course, this wasn't our first trade entry. We are looking for the trade setup when the market has started to play out. Now, this was one of the trades I actually gave out in my general group, and we happened to lose this trade entry the first time. You can see why, because we had a 4-hour level of support here. I'm stating this so people can understand the psychology of trading. You're not going to win every trade. Stop thinking that you're going to have a 100% win rate or a very, very high win rate in every single strategy. You do not need to win every trade. As long as your risk management is on point and you have a good risk to reward, 1 to 2, 1 to 3, 1 to 4, 1 to 5, etc., you will be okay. So now we can see that this market was not respected at this level over here, and now we can see the same type of pattern forming again. We see a nice support level here, we see a breakout, and we're seeing a retest to this 4-hour level of support here, and we're going to be looking for a continuation of a buy. What would be your entry confirmation for a possible buy? Now, all you're looking for is a bullish or bearish candle off of this level. We can see that there is a bullish candle 4-hour close right here, which is perfect for us to understand that this market could buy going into Asian session on market open, or because it's a great British pound pair, it could decide to start buying in London open. So it's up to you to ascertain when you're going to be looking to enter this pair. Now, I know a lot of people are going to be asking this question. Okay, John, you've shown us top-down analysis, you've shown us how we can enter the market. Now, how am I actually supposed to know where my stop loss and my take profit is? Now, I'm going to give you some areas of how you can understand this, and we're going to do this fantastic thing again. We're going to go down another time frame. Now, when we go down to the 1-hour time frame, this was the 4-hour candle that actually formed. Each candle on the 1-hour time frame is going to be representing 1 hour of price movement. So the 4-hour chart is 4 hours of price movement, each candle. This is 1 hour of price movement. And what we're going to look for here is we can see straight away that this was a wick, similar to how I showed you the daily and the weekly resistance levels. This was a wick on the 4-hour chart here. So what I'm going to be doing is put a nice level here, and I'm just going to call this one my 1 hour stop loss level. Now, this shows me that realistically, if the market comes back to this level and breaks this level, then ideally I don't want to be in this trade. It can do what it did the last time and actually take us out of the trade. So now I've got my stop loss level. I'm going to be looking for my take profit levels. For me to do that, I need to be able to see a bigger chart. So it's either I zoom out, or to make it a lot easier for myself, I just go up a time frame. When I go up to my 4-hour time frame, now I'm in a position where I can see clear market structure, and what I'm looking for is where price has previously created from the higher high. I'm looking for lower highs that we can see has formed. So of course, because it's a buy trade, I'm looking for lower highs. If it was a sell trade, then I would be looking for higher lows, so I can see where the market might go towards in future. So now I'm going to mark out this level over here, and I'm just going to change this to my target high. And what I'm going to do is I'm just going to clone this, and I'm just going to mark this out again over here. So straight away, now this is looking like what, people? this is looking like a trade setup. You can see how I've gone from the monthly time frame all the way down, and I've managed to find myself a trade I could possibly take with a stop loss level, and I've got my target levels, and I've got my overall daily resistance level here. So I've got 3 possible areas of where the market can go towards, where I might be able to find take profit levels and have a 1-to-3 risk to reward ratio trade. Now, when it comes to your stop loss level, do not put your stop loss directly on the line. Give it about 10 pips more from this area, just in case they decide to bring price back down to this level. Do a little wick, like as you can see here, and then they manage to take off. So give yourself a little bit extra, about 10 extra pips breathing room, and there you go. So really, guys and girls, I can't lie to you, it's pretty much that simple. We're going to wrap up what I just spoke about now in the conclusion. So in conclusion, what I've done is I've shown you, you need to go to your monthly time frame. You need to break down from the monthly time frame to the weekly time frame, then to the daily and the 4-hour for levels of support and resistance. After that, you can go to the 1-hour chart to find yourself where you could have a stop loss level. Then you can move yourself back up to the 4-hour or higher time frame to look for take profit levels. What you're going to be doing in terms for an entry in a chart is you want to see at least a 4-hour movement off of your support or resistance level. That should be marked up as your 4-hour support or resistance level. This gives you a strong indication that the market should be pushing in a bullish or bearish direction, and for this trade it's a bullish direction, and you want to be entering on the close of that 4-hour candle. I can't make it much more simple than that, guys and girls. I'm going to be doing a lot more videos like this, picking out one of the pairs that we are looking at in the VIP section. And what we actually do here is when we get these trade setups, we actually have an indication from Neo, the indicator. So if you're interested in that, the link for that indicator and the Telegram group for the alerts is down below. We just wait for that to appear and then we enter the trades. It's really, again, that simple. All you have to do is have your risk management in check and your psychology teaching you that you're going to win and lose trades. And with all that good stuff being said, guys and girls, please don't forget to like, comment, share, subscribe. It's your boy Big John, and I'm out. Peace, peace, peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.